Hey there, Bitcoiners. Welcome back to Edge 21, where we deliver all things Bitcoin without the noise. If you're looking for the latest scoop on what's driving Bitcoin's price action, you're in the right place. Today, we're diving into the big forces behind Bitcoin's recent price surges, the role of institutional investors, and what key price levels to watch out for in the short term. Bitcoin is making waves, pushing above $71,000 and climbing. But is this rally here to stay, or should we expect a pullback? Stick around and we'll break down the details, supported by data, insights, and charts from experts like James Check. Before we jump in, don't forget to like, subscribe, and hit that bell icon to stay updated on everything Bitcoin. Now, let's get into it. So, what's been moving Bitcoin up the charts lately? Let's start with the numbers behind the headlines. First up, the big story: institutional demand. Bitcoin ETFs are dominating with over $20 billion in cumulative inflows just in their first year. This charge is led by BlackRock, bringing in about $1 billion a week. When institutional giants are pushing this level of demand, it's clear they're betting big on Bitcoin's future. Take a look at this chart by Gabor Gerbach that illustrates Bitcoin ETF inflows exceeding $20 billion. You can see the pace and sheer scale of their growth, especially as daily buying now outpaces the amount of Bitcoin being mined. James Check has some strong words on this. He points out that Bitcoin ETFs took in $4.2 billion over just 3 weeks, pushing cumulative inflows to a record $22.4 billion, showing the strength of long-term holders who are backing Bitcoin through thick and thin. According to that, we're seeing strong support from on-chain data. Glassnode recently reported a 3.3% increase in Bitcoin's realized cap, hitting a record high of $646 billion. This surge is thanks to $21.8 billion of fresh capital flowing into Bitcoin over the last month, as shown in Glassnode's graph. When liquidity like this backs Bitcoin's price, it's usually a strong indicator that the uptrend has staying power. Now, let's talk about the whales. According to Santiment, while whale wallets holding between 100 and 1,000 BTC have been steadily accumulating, adding about 300 wallets in just a few days. That's a big signal because, as we know, when whales start accumulating, they're typically aiming for the long haul. When liquidity like this backs Bitcoin's price, it's usually a strong indicator that the uptrend has staying power. Another significant trend? Spot Bitcoin ETFs in the US are seeing a massive comeback. Ki-Young Ju pointed out in his chart that demand has surged to a 6-month high, with 64,962 BTC in net inflows over the last month. That's more than double the monthly output from miners, reinforcing Bitcoin's rising price and establishing it as a legitimate asset in the eyes of traditional finance. If you take a close look at Ki-Young Ju's chart, you'll see how this surge in regulated ETF flows correlates with Bitcoin's price movement. Now, what about timing? Here's a golden nugget from Crypto Rover. Buying Bitcoin 500 days before the halving and selling 500 days after has proven to be highly profitable in past cycles. Right now, we're 185 days past the last halving, putting us right on schedule for a bull market, so keep your eyes peeled for those higher highs. And James Check isn't shy about sharing his thoughts on what's coming next. He describes the market as tightly wound and ready to move, especially with the US election looming. His spidey senses suggest that Bitcoin might be about to play performance catch-up with assets like gold, with major volatility likely ahead. Alright, short-term predictions. Where is Bitcoin headed next? Right now, Bitcoin faces some resistance around $70,000 to $71,000. If it can break past this, traders are aiming for the March high of $73,777. And beyond that, $75,000 is the next key target if institutional demand stays strong. As we approach the US election, there's also speculation around what the outcome could mean for Bitcoin's price. Some believe a Donald Trump victory could push Bitcoin up to $85,000 or more, thanks to his pro-business stance. On the other hand, if Kamala Harris wins, Analysts think Bitcoin could stabilize around $75,000 as more regulation comes into play. Both scenarios indicate potential growth, just with different flavors. And let's touch on a technical note. Bitcoin's Relative Strength Index, or RSI, is hovering near 70, signaling it might be a bit overbought. A short-term dip could be in the cards, but it's worth noting that derivatives data shows traders aren't panicking. The funding rate remains high, meaning traders are doubling down on bullish positions rather than cashing out. The key takeaway? If Bitcoin holds above 66,500, we're looking good for a continued rally. But if it slips below, we could see a deeper correction with a support around $65,500. And with CME's open interest hitting record highs, the big players are in it for the long haul, meaning this rally has some serious staying power. In summary, keep an eye on $73,777 and $75,000 as potential price targets, but also stay alert for any short-term dips, especially if we lose support at $66,500. So there you have it, folks. Institutional money is flowing in, whales are stocking up, and the upcoming US election could be a huge price mover for Bitcoin. Whether you're expecting Bitcoin to hit $75,000 or shooting for that $85,000 mark, one thing's for sure, Bitcoin is back in the spotlight. Thanks for tuning in to Edge 21. If you enjoyed this breakdown, hit that like button, share, and subscribe for all the latest Bitcoin insights. And if you want even more, be sure to check out our upcoming app launch where you can join the Edge 21 community and stay informed on everything Bitcoin related with trending news, videos, and real-time price alerts. Thanks for watching, stay strong, and hodl on.